Market monitor is a market breadth based timing tool. It is used for determining whether I want to be bullish or bearish and how aggressively I want to be playing a bullish or bearish side, right? In order to do that, the information is generated in TC2000 using scans. So these are the scans which are used for generating this information, and then the information is transferred here. Now we already looked at these these four columns, right? Let's look at these columns. This is a very important column. This is primary breadth indicator. Whenever I say primary breadth indicator is negative, that means I'm referring to these two columns. I'm referring to number of stocks which are up 25% in a quarter, or number of stocks down 25% in a quarter. So when this is red, as it is showing currently, it is red. What it telling you is that there is selling in this market. This is not a market where bullish breakouts are likely to work. If you try and buy bullish breakout during this particular time period, you are going to find low success ratio. First, less number of breakouts will be there, and whatever you see, it is not likely to follow through. So the simplest way to use this is like a signal: green light, red light. Because when the green light is there during this time period, you'll see that breakouts were working for a short window, and there was a big window here for a couple of weeks or month when breakouts were working. So these figures come in from where? These figures come in from here, from this column, quarter 25, quarter 25 down, right? And that's where this come in from. Now this indicator is very important in giving you information about market timing, because what happens is that at the start of a bearish market, like this particular bearish market started somewhere in November of 2021, and if you see there, you got a, so the red light came in, right? There was like green light for a long period of time, and then you had this 11/19/2021 when the primary indicator turned bearish. And as you can see, since then there has been like a lot of selling which has come in continuously in the market, and during that period shorts have worked. So to use this indicator, you have to use it like a green light, red light kind of an indicator. And that is exactly the same thing which has been converted into red light, green light here. So as you can see there, this has been converted into red light, green light now, and you will see that indicator will tell you, like say if you see around December of last year, what you would see is that when did the light turn green, or like when did the light turn red, right? And basically, so you will see that the indicator turned red or green, right? Accordingly, it calculates, like, and this is calculated. So if you see like the latest year, you'll see this much better, right? Basically, so if you see, all that is done in this particular thing now to just show it, like one of the members gave me this idea. So after that we recreated that. So as you can see, this is red now. So it just colors that particular date red. So it tells you on a calendar now as to what was the red period. So as you can see, this entire period was red. There was a 2 weeks of like a little bit of buying, and then you had a window of opportunity in August where things happened. So this is just, this information again is derived from this. If this is red, then the calendar date gets red. If it is green, then it gets green. So this is the most important information from market monitor which I derive. Now at a simple level, what it tells you is that when it is red, you should avoid breakouts and look for shorts, and when it is green, you should be looking at breakouts, right? But this also gives you another set of information which is very useful. When these figures reach very extreme levels, like when number of stocks of 25% plus in a quarter is very, very low, if that figure is less than 200, which happens very rarely, it happens near the market bottoms, what you will see is that then the market typically bottoms, because that indicates that there has been a washout kind of selling. So if you see in 2020, there's a washout kind of selling, and during that time period, if you see during March of that period, the reading reached a low of 180. Whenever the reading goes below 200, that's extremely bullish, Whenever this reading is below 200 and there is so much selling, that's extremely bullish, because that tells you that there is a capitulation kind of selling. So the number 200 or less than 200 tells you that there is a capitulation kind of selling. That capitulation kind of selling is what indicates that there is likely to be a turn. So as you can see, once the capitulation kind of selling happened, the buyer stepped in, and after that you had 1100 days, 900, 1300, series of positive days, and within days the primary indicator turned bullish and the primary indicator remained bullish for a long period of time after that, right? The primary indicator remained bullish for a long period of time. So this particular column is very important, which is what I call primary indicator, number of stocks of 25%. So when it reaches very extreme, right, if it reaches extremely bearish stage where you have less than 200 stocks up 25% in a quarter, it tells you that every stock has been sold, or whatever needed to be sold is sold. And from that particular signal, when you get a rally, that rally is going to last for 3, 4, 5, sometimes 8, 9, 10 years. So that is why it is a very powerful signal, and it is not going to happen very often. Once in a while it is going to happen, and many times you will see that it happens only intraday. That means like in an intraday, that indicator goes below 200 and buying comes in, and as soon as buying comes in, the market turns, and so as a result, by the end of the day, you are not even going to see a below 200 reading, because we are calculating this at the end of the day. So whenever there is, the market is going down, right? Currently the market is going down. We are in a bearish market, right? I am always looking for this signal to show up so that we get an extreme reading on this particular reading. So if I see this reading going extreme, like going below 200, then I'll mentally be prepared and I'll be ready to look at a turn in this market, or the bearish market is at end. That is what it indicates. So this is a very powerful signal, and this is really the role of market monitor, to tell you where the market is likely to bottom. And then that particular signal is what I use for making decision on a 401k. So if this signal goes below, so if this goes below 300, 200, then I am going to start looking at deploying my capital into 401k. And similarly, after a bull market has been going on for some time and this signal turns bearish, then I use this to get out of my stocks in 401k and sit in cash, right, till I find an extreme signal. So I have been sitting in cash since November, and I have not done anything in my 401k because this signal has not really shown, which is like extreme bearishness. When this figure goes below 200, that means like, this figure is very high. That shows you extreme bearishness. So this is how the primary indicator can be used. The primary indicator can be just used as a traffic light signal, and that is exactly what this signal is, what is shown here nowadays. Breakout unlikely to work. That red light signal comes in from this spreadsheet, right? So because if you see currently, the primary indicator is bearish, right? So that's why that signal is bearish. But the other use of this primary indicator is when it becomes extremely low in number. Now, can you use it in the other way around? Like if the number of stocks down 25% in a quarter goes to 200, that doesn't mean anything. At the start of a bull market, you are going to get an extreme reading where this number of stocks down 25% in a quarter will go below 200. That is not a signal. Whenever you are using market breadth, always remember market breadth as a signal works very well at bearish bottoms. It doesn't work to find out a top. If you use that to find a top, you are going to be prematurely getting out of your 401k. So that is not the signal. The signal is always when this becomes extreme below 200 to enter. Exit signal is when this turns red. The exit signal is when it turns red. So this is how the primary indicator is used. This data, this is what Market Monitor was all about when I developed it many years ago. All these have been later added. All of this data has been later added because people kept on asking, and then we added this data. But this is the core, hardcore information which you need in order to make a decision using the Market Monitor. So again, Market Monitor works as a market signal mechanism, and it works very well as a red light, green light kind of a signal based on the quarterly figures. And it also works very well at extremes. If there is extreme bearishness, that is very bullish. And from that level, when a market rallies, it is going to rally for 3 to 5 years. We are currently not in that kind of a situation when I made this video for this guide.